Hey everyone, it's Julie here with TipRanks. Today we're taking a look at 5 strong buy dividend stocks for June. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. The end of May is here, so that means it's time to take a look at some dividend stocks for June. Today, we're checking out 5 stocks that all have a strong buy consensus from Wall Street, a solid dividend, and an ex-dividend date coming up in the next few weeks. That ex-dividend date is when you must own a stock buy in order to be eligible for that next dividend payment. So with those coming up in the month of June, it means you're not going to have to wait long to start collecting that passive income. We found these stocks using the TipRanks dividend calendar. You can find that under the dividend menu or under tools under calendars. And here you can go day by day and see which stocks have ex-dividend dates coming up and filter by different things like analyst consensus, market cap, sector, and exchange name. You can check out the TipRanks dividend calendar for yourself right on the website. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel. Now let's dive right into these dividend stocks for June. We're going to kick things off with our earliest ex-dividend date, looking at L3Harris Technologies. They trade under the ticker LHX, currently priced at $244. Overall in the past year, they are up 8% and have climbed more recently in the last 3 months, up over 17%. This aerospace and defense technology company has been paying a dividend since 1995 with consistent growth. Their 5-year compound annual growth rate comes in above 9%. Their current quarterly dividend is $1.20 for a yield of 1.92% and a payout ratio of 37.5%. Their ex-dividend date is coming up soon on June 3rd for payment on June 18th. Their last quarterly earnings report came out near the end of April, where they did have some mixed results with an earnings beat but miss on revenue. Earnings per share of $2.41 beat expectations by 10 cents, while revenue of $5.13 billion did fall $92 million short. The company did secure a $1.1 billion contract with the Dutch Ministry of Defense and announced some new partnerships and innovations. The stock currently has 14 current analyst ratings and comes in as a strong buy with 11 buys and 3 holds. The average price target comes in at $251, which would imply an upside of just 2.5%. But when we look at some of the more recent ratings, we can see some more bullish outlooks. Price targets range from a downside of 13% to a newly increased price target with an upside of over 10%. Our second dividend stock is Hancock Whitney. They trade under the ticker HWC, currently priced above $54 per share. In the past year, the stock has gained 17%, but did fall off at the start of April, climbing back slightly, but still in the red 3%. This financial holding company has been paying a consistent dividend since the early 1990s, and over the last 5 years has a compound annual growth rate of over 8.8%. Their current quarterly dividend is about 45 cents per share, for a dividend yield of 3% and a payout ratio at 30%. Their ex-dividend date is June 5th for payment on June 16th. And they also saw some mixed results for their first quarter earnings report in mid-April with an earnings beat but revenue miss. Earnings per share of $1.38 beat expectations by 9 cents per share, while revenue of $367 million fell $460,000 short of analyst expectations. During the quarter, the company did repurchase 350,000 shares of common stock and did a 50% increase to their dividend. Following that quarterly report, we did have several analysts reiterate buy ratings, though we did have a mix of some slightly increasing and some slightly lowering their price targets. One analyst from Piper Sandler said that they see Hancock Whitney as one of the most undervalued banks in the industry. Another analyst who slightly lowered their price target said that the results reflect a resilient net interest income and net interest margin despite loan runoff in the quarter. And with 6 current analyst ratings, the stock does come in as a unanimous strong buy. The average price target of $65 implies an upside potential of nearly 19%. Looking at those price targets down below, they range from an upside of 13% up to 28%. For our third dividend stock, we have another company in the finance industry with United Community Banks. They trade under the ticker UCB, currently priced at $28.73. In the past year, they've gained about 12%, and in the last 3 months are down about 10%. This financial services company has been consistently growing their dividend for the past 10 years, and in the last 5 years has a growth rate of over 6%. Their current quarterly dividend is about 24 cents per share, for a dividend yield of 3.3% and a payout ratio just below 40%. Their ex-dividend date is June 13th for payment on July 3rd. And they came out with an earnings and revenue beat in their last quarterly report, along with some strong deposit growth. Earnings per share of 59 cents beat expectations by 3 cents, while revenue beat by $1.7 million at $248 million. The company also saw healthy loan portfolio growth at 7%. At the start of May, they also completed a merger. They merged with A&B Holdings, and American National Bank became United Bank's subsidiary. We did also have some analysts slightly lower price targets following their earnings report, but said that the company is well positioned to grow top line and total revenue and earnings per share through the next 2 years, as near-term net interest margins should expand, while United's underlying markets are supportive of loan generation. They do just have 4 current analyst ratings, but come in as a strong buy with 3 buys and 1 hold. The average price target of $32 implies an upside of over 12.5%, and those ratings down below range from 11 to 14% upside. Our fourth stock is our highest dividend yield of the bunch today. It is a BDP, Ares Capital. Trading under the ticker ARCC, they're currently priced at $22 per share. They're up just a couple percent overall in the year, and they are in the red slightly, down 5% in the last 3 months. As a BDC, similar to a REIT, they are required to pay out so much of their income to shareholders. This leads to attractive high dividend yields, but does have some different tax implications, so just keep that in mind. Their current quarterly dividend comes in at about 48 cents per share, for a dividend yield of 8.73%. Their ex-dividend date is mid-month on June 13th for payment on June 30th. In their last quarterly report, they did fall short of earnings and revenue estimates, but there were some other highlights. Their earnings per share of 50 cents fell 3 cents short of expectations, and revenue of $732 million was $38 million short. But the company did see increased investment activity, committing $3.5 billion in gross commitments, and their dividend marked their 63rd consecutive quarter of delivering stable or increasing dividends. And with 8 current analyst ratings, the stock comes in as a strong buy with 7 buys and 1 hold. The average price target of $22 is fairly flat from current prices, and looking down below, we have already surpassed many of them set back in April, ranging from a downside of nearly 5% to an upside of 8%. If you've made it all the way to our 5th stock today, then this is a reminder to make sure you've hit that thumbs up button. Last but not least, we have Keurig Dr Pepper. They trade under the ticker KDP, currently priced above $33 per share. They have seen some ups and downs in the past year, down 1% overall, and in the last 3 months, down about the same. The popular beverage company has been paying out a consistent dividend for about 14 years now, and over the last 5 years has a growth rate of 8.5%. Their current quarterly dividend is 23 cents per share for a yield of 2.77% and a payout ratio of 46%. Their ex-dividend date is near the end of June on the 27th for payment on July 11th. And they came out with both an earnings and revenue beat for their latest quarterly report, with earnings per share of 42 cents beating by 3 cents per share and revenue of $3.6 billion beating by $71 million. The company achieved market share gains across their brands like Dr Pepper and Canada Dry and saw the successful integration of Ghost Energy. Earlier this month, an analyst from Wells Fargo increased their price target on the stock, noting the company demonstrated robust sales growth, which has shown strong scanner data in early months of the year compared to its peers. They exhibit broad-based strength beyond just their Dr Pepper line, with other soft drink offerings showing positive volume growth. Keurig Dr Pepper is rated a strong buy based on 15 current analyst ratings with 12 buys and 3 holds. The average price target of $39 implies an upside potential of 17%. Looking at those price targets down below, they range from an upside of about 1% all the way up to 22%. So that is a quick look at 5 stocks, all rated a strong buy among Wall Street analysts and with ex-dividend dates coming up in the month of June. Let me know your thoughts on these companies, which stands out the most, and what other dividend stocks you have your eye on lately. I always love hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, so please always stick with your own investment plan. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.